Welcome back to The Money Mentor. In today's video, we'll be diving into the exciting world of investing in the stock market. Whether you're a beginner or looking to expand your investment portfolio, understanding the basics of the stock market is crucial. So, let's get started. Introduction to the stock market. The stock market is a marketplace where investors can buy and sell shares of publicly traded companies. It's a platform that allows companies to raise capital by selling ownership stakes in the form of stocks or shares. Investors, in turn, have the opportunity to participate in the company's growth and potentially earn returns on their investment. Opportunities of investing in the stock market. 1. Potential for capital appreciation. Investing in stocks provides an opportunity for your investments to grow in value over time. As companies grow and become more profitable, the value of their shares can increase, allowing investors to benefit from capital appreciation. 2. Dividend income. Many companies distribute a portion of their profits to shareholders in the form of dividends. By investing in dividend-paying stocks, you can earn a regular income stream on top of potential capital appreciation. 3. Diversification. The stock market allows you to diversify your investment portfolio by investing in a variety of companies across different sectors and industries. Diversification helps spread your risk and reduces the impact of any single investment's performance on your overall portfolio. Risks of investing in the stock market. 1. Market volatility. The stock market is known for its volatility, meaning that prices can fluctuate significantly in short periods. Market fluctuations can be influenced by economic conditions, company performance, geopolitical events, or investor sentiment. It's important to be prepared for the possibility of short-term losses and market downturns. 2. Potential loss of capital. When investing in stocks, there is always a risk of losing a portion or all of your invested capital. It's crucial to carefully research and analyze companies before investing and diversify your portfolio to mitigate risk. 3. Market uncertainty. The stock market can be influenced by various external factors such as economic recessions, political instability, or unexpected events. Uncertainty in the market can impact the performance of individual stocks and the overall market, leading to fluctuations in prices. Conclusion. Investing in the stock market can provide opportunities for long-term growth and income generation. However, it's important to remember that investing in stocks involves both opportunities and risks. It's advisable to educate yourself, develop a well-thought-out investment strategy, and consider seeking guidance from a financial professional. That wraps up today's video on investing in the stock market. We hope this introduction provided you with a better understanding of the opportunities and risks involved. Don't forget to subscribe to The Money Mentor for more insightful content on personal finance and wealth building. Thanks for watching, and we'll see you in the next video.